Hey guys, it's Eric from foundersbeta.com, and I'm delighted to have Ben from Corl. Ben, thanks so much for joining today.
Thank you, Eric. Nice to be here.
Yeah, so let's get started. So tell us about Corl and what it does.
For sure. So I'm Chief Investment Officer at Corl. Corl, as a company, we believe in the future being mostly digitally enabled. So most businesses today are started online. They derive majority of their revenues online. And we felt that there wasn't many funding options available for them. So we provide capital to help grow those types of companies and then take a percentage of revenue as a return on our investment.
Very cool. So what was it like in the early days? So when you're thinking about the idea, like how did you go about, validating, building a team and going live with it?
Yeah, for sure. It was an interesting process. If you can imagine that most people weren't super excited to give a couple of kids a bunch of money to go and invest, saying they were kind of better than venture capital, right? And so it was, it was an interesting start. But basically, I'm a finance nerd by trade, and so we've always kind of had this vision and an idea just from past entrepreneurial activities, just hated kind of the venture capital raising process and figured that there must be a better way to do it. We actually copied the instrument from the oil and gas industry, if you can believe it. But we found this model where when you're setting up an oil site, you invest into the operations to kind of get it going. That those operations will start deriving revenues, and then eventually the site will come to a cash flow standpoint where they can afford to buy out the investors. And we thought that kind of idea was a great idea for companies that are in the digital economy, companies that don't have the collateral that banks and other lenders are looking for. They don't want to give up personal guarantees, and maybe they don't qualify for the 1% of companies that do qualify for venture capital. And so we thought it was a great business model, and so we went to market. The first early years for us were around designing the software. And so we wanted to be as automated as possible, provide as kind of quick turnaround as possible so as not to waste people's time. We actually sell that software product separately from the royalty investments that we provide through a company called Rails, Rails.ai. And then the last kind of 12 months up to then, we'd just been kind of scrambling to find cash wherever we could to invest in companies. And then when COVID hit, it was kind of a good inflection point for our investing side of our business. Our entrepreneurs fared quite well through COVID. A lot of funds did not, unfortunately. It was just a tough time for a lot of small businesses out there. But with that kind of safeguard against a downturn event, we were able to use those returns to go and get a proof of concept line of credit, which we have then deployed, and now that's led to where we are today with a much larger line of credit to invest in at a kind of a lower cost of capital on our side, and so we can really kind of go to market in an effective way now. So. That's kind of where we're at now.
Right on. So yeah, tell me about some of the companies that you work with. Like, what do you look for in terms of like if the startup is ready to use your platform, or is there a particular criteria you look for?
Yeah, we're definitely unique in that sense in terms of what we look for. A lot of companies at our kind of stage or funders out there have specific niches that they look for, whether it's paid ad spend or inventory financing. For us, we just want to back good capital allocators, basically founders who are efficient with their capital, that are running good businesses. They don't have to be on the venture path, but for us, it's 80% of the decisioning is quantitative in nature.
Mhm.
So we'll have APIs through our online application that connect to online banking, accounting, and payment processors. And with that information, we make our decisioning kind of next day, basically. So for us, it's well-run companies that we look to back, and we provide a good product for those type of founders.
Right on. So talk about the, because in the early days too, it's such a key to have like, solid team members. Anything that, any tips that you may have for, building a team, whether it's early, you may be looking for a co-founder or any ideas there?
Yeah, for sure. I think, it's a different conversation when you're looking for a co-founder or even kind of your first hires. It's a much different role than your typical hire. But for me, I've done quite a bit of hiring now in the last little while, and my mindset towards hiring has changed, kind of 180, which I think has proved very valuable. So I'm happy to share it. But
Right.
When I first started hiring, it was always kind of who is the person, right? And are always looking for kind of the right candidate.
Mm-hmm.
And less focusing on the role as much, which is hard, right? I mean, if you have a kind of a specific, kind of mindset or a specific type of person that you're looking to hire,
Right.
Anybody who comes in is going to be a little bit different than what you envision.
Right.
And so that kind of sets you up for trouble, I find. And so my new rationale is to support the role and then let kind of the right person come in that way. And so if you're focusing more on the role and less the finding the perfect person, then anyone who comes in will have better success because you're really supporting the role.
Right.
And so, and then I guess that's another tip is that I find that whenever I'm hiring someone, if I learn something from the conversation, because I'm certainly not an expert in everything, if I learn something from the conversation, that generally is a good sign. And then if I focus all of my efforts on making sure the role is as well supported as can be, that generally leads to the most success from a hiring standpoint.
Right. Those are great points for our audience, because especially early on, you want to bring on the team members can figure things out as they go, right? So
for sure, yeah. Early on is tough though. I mean, you need people who are responsible and have the ability to kind of pick up and create value, which is a tough skill. It's certainly a unique person that you need either as a co-founder or an early team.
Right on. So talk about the, continuing to talk about fundraising for startups. Like, what are some tips that you may have, over the years with your experience that will help them, raise the right amount or help them accelerate?
Definitely. So like I said before, I'm a bit of a finance nerd, so I'm always looking at cost of capital across a variety of different funding options. I feel like we're really in a golden age for startups right now, just in terms of what capital is available out there. I think people are a bit misconstrued when they think that venture capital is kind of the only answer.
Right.
And I really believe that really only like 1% of companies truly qualify for venture capital. And so I feel like a lot of companies when they're starting out are kind of just like hitting their head against the wall and trying to raise capital through the VC route when they don't qualify for that kind of specific product. And so I think kind of generally I have a couple of rules for raising that I do communicate to most of our portfolio companies. I think that if you do qualify for venture capital, you do have that kind of exit event that is what they need. You should really only be raising venture capital for a small circumstances. And those circumstances, I think, are like product development. If you're pre-revenue or in the idea stage, that's a good time for venture capital. If it's things that don't directly generate revenue, but things that kind of will help build the equity base, then those are kind of applicable for venture capital. But if you're looking for capital that directly benefits revenue generating activities, whether that be like marketing or ad spend, inventory, even hiring like sales or marketing people, if there's a if there's a revenue generating expense that can go out there, there are a ton of other non-dilutive options that are easier to get. The cost of capitals are getting lower now, and you just don't kind of get stuck in that venture cycle. And so that's kind of my biggest recommendation, is just kind of look at what your capital expenses are. A lot of times you don't need venture capital to really get your business going. And go out there, acquire your first set of customers yourself. Like, you have to do that. As soon as you have a kind of a repeatable process, then go get capital from a kind of a variety of different options. I mean, I'm a bit biased. I feel like Corl's kind of the best option that's out there.
Right.
And for us, like, we are looking to back pretty well any revenue generating activity. So we're not siloed like some other capital providers that are out there.
Right.
But yeah, definitely kind of take a look. There's lots of options out there. We're in a really good time for raising capital as a startup. And don't feel like you have to get on the venture kind of treadmill, basically. So.
Right. Because I mean, raising venture capital is a whole other thing, right? It takes a lot of time, takes a lot of rejections too, right? And most of the times, I think you may not need it, right?
Yeah. Yeah. No, I agree. I think if you can, and I think like doing the things properly will help with the venture capital conversations if you want to anyway. And so I think going out and like getting your own first set of customers, using cash that's available to you wherever, if there's a good return on it, like VCs will see that and see that it's okay. It's a fundable business, and that'll help those conversations, even if you want to go that route as well. So.
Right. So talk about common mistakes. What are some mistakes you see startups make when it comes to fundraising?
For sure. I mean, there's lots, unfortunately. When it comes to fundraising, I think when it comes to fundraising specifically, I think the two that I see most common are like organization. So whenever you're dealing, like on my side, if we're dealing with a founder that's very well organized, has all the information readily available, the books are all well in order, to me that kind of signals that the company is kind of well managed and organized as well. It's always a problem when you kind of get going with a founder and then it takes them 3 or 4 weeks to put together documents that any investor would need. It's kind of a bit of a red flag.
Right.
And so definitely when you're going for a fundraising, it's a big event. So make sure you know kind of what you want and how to set it up, and then make sure you get all of your information, all your ducks in a row to make it as easy as possible for the investor to get through it.
Right.
That's a big one. The other big one I would say is kind of what I touched on in the last point, but know who you're selling yourself at that point, right? So know who you're selling yourself to. Like I said, with venture capital, they're looking for the companies that can become $1 billion+ valuation. And so they're looking for those types of companies where there's a framework there to get to that valuation. So if you are pitching to them, clearly outline how you're going to get there. And otherwise, or on the flip side, if it's non-dilutive, like tell how you're going to service that investment, basically, like really show that. And so definitely pitching your business and understanding who you're speaking to is important.
Right. Any other strategy that may help startups for fundraising? Like, for example, like when do you look into it, or how early in the startup? Anything that comes to your mind based on your experience?
For sure. I mean, for us, it was a long process. So it takes time. So have that in your mind as you're going to raise. Like if you're going VC route, it's 3 to 9 months. It's a longer process. That process is shortening now today, just because there's more competition out there. But you really have to build that FOMO for your round. Really, you want to make sure that you're getting your first lead in right away, so someone who's going to lead the round, and then really pushing others to get interested and get invested based on traction, whether that's raised amount. yeah, it's a bit of a beast on the venture capital side. That's why I do recommend the non-dilutive options like
Right.
ourselves.
Right.
But yeah, I think it's a bigger scope than you are anticipating. And so my recommendations is to just reach out to investors early and get a dialogue going. Don't ask them for capital on the first day. Just let them know what you're up to, and just stay in touch and build your network that way.
Mm-hmm.
And then when you're ready, get all your information in order and go for that raise, and try to make it as quick a timeline as possible by building up that FOMO. But for those who don't want to get on that path because it's a bit of a nightmare, then you got us, and we're easy to work with. And then as long as the financials and everything looks in order, then we've got capital for the rest of your company's history, basically. So a bunch of options now, and it's a good time for startups. So
right, sounds awesome. So I always ask the guests on Founders Beta, what's the best advice you would want to give to our audience? Like, it could be anything, like philosophy on startups, building a company, anything really.
Yeah, it's a good question. The best advice I've ever gotten, I think I've always sort of used this as towards my career. I don't think it kind of fits best on your personal life, but from a career perspective, and especially I think the entrepreneurial journey is a tougher one. It's a memorable one, but I was working, actually I was probably about 14, 15. I was working at a golf course outside a city outside Toronto. Mm-hmm. And one of the most successful people at the golf course gave me some advice that I've always used, but he basically told me that especially coming out of school, do the hardest thing you can possibly do, mm-hmm. and then kind of continue in every decision that you make, like from a career perspective, to continue to do the hardest thing rather than kind of maybe the most comfortable or even the most well-paying, mm-hmm. Because that'll really teach you the most. You'll learn the most from those things, and it'll challenge you the most, basically, which will set you up well for later on. And so for me, that meant starting businesses. It's tough. You certainly have your ups and downs, as I'm sure most of the audience would know. But that kind of life advice has really stuck with me through my professional career, is like not to get too comfortable, continue challenging yourself, and really tackle like the hardest things you can possibly do, because you'll learn the most. And definitely in the startup world, that like if you're maybe not ready to start a company, but join a startup at an early stage, right. You might not get paid as much in the interim, but you'll learn 10 times more than you would in corporate life, and it'll be much more fun and rewarding, I find. But maybe I'm biased, I don't know. So.
Right. So for our audience that want to connect with you, learn about Corl, where can they go?
Yeah, for sure. We're in the middle of a website redesign right now. So the website is we'll start looking a lot sharper in the next kind of couple of weeks. But that's the best place to reach out. It's corl.io. So that's corl.io. Mm-hmm. Alternatively, we're on Twitter. You can reach out to us there. And yeah, we'll get back to you through there. If there's any questions about kind of fundraising or specific cost of capital, I'm always happy to learn more. And definitely, like, each business is a case by case basis, and so it's not one size fits all across any product. And I mean, we are pretty well acquainted in the startup fundraising environment now, so I'm happy to provide any advice or introductions where applicable. And then do check us out too. I mean, we're going to be announcing a pretty large that capital event that I mentioned earlier. We'll be announcing that shortly, and so we do have quite a bit of cash out there. So if you're looking to raise, either offsetting some of an equity round or just bypassing an equity round in general, do let us know, and we can see what we can do.
Great. Awesome. Well, Ben, thank you so much for joining us today. It's been an honor to have you today, and we're looking forward to sharing this with our audience.
Awesome. Pleasure is all mine. Thank you very much.